Hey there, it's Mark from Caliber Home Loans. It is Saturday the 8th, and went out this morning, took the dog out, and it was 29 degrees out. So, it's Michigan. I knew that when we had all that warm weather earlier in the year, we'd pay for it. So I guess now we're paying for it. But so I just wanted to go over the market for the last week. It was pretty tame. I mean, again, the Fed is in there buying bonds. They're about the only buyer right now on the conventional side. So let's take a look at yesterday. So for Friday, pricing got a hair worse over the course of the day, which tends to push rates up a little bit. But the spread is, the spread is almost non-existent. Although pricing did get a little bit worse. I've also checked with some other lenders. And pricing got worse at the end of the day. I think lenders they're raising rates, or they raised rates a little bit late Friday to slow down the refis over the weekend because of the liquidity issues that we've talked about in the past. So that was yesterday. So for the last week, again, it looks pretty jagged, but we started at just above 104 and ended at just below 103.8. It's not a big spread. So it looks worse than it is. And for the last month, it's a pretty, we've had these dips early on in the month for the last month. But again, we've been looking at a pretty consistent pricing. Even with this, the high was just above 4.5 and the low was 3.5. So that's just not a large range, especially over the course of a month. And that's really because the Fed goes in and they buy massive amounts of bonds every day to try to even this out. They're playing this game with they don't want to buy too much and kind of rattle the market, but they need to buy enough to keep the rates consistent day over day, so that when all the lenders go to deliver these loans to the agencies, the rates are about the same as what they were locked in at for the client up front. It's a little confusing. It gets a little convoluted, but at the end of the day, they're doing a good job with keeping rates consistent. A lot of people have said that rates are going to go down in the future. There's two opposing forces right now. When the government amasses tons of debt, rates tend to drop. But we're also printing money like there's no tomorrow. So that's inflationary, and that raises rates. So it's going to be so the two forces are opposing. I don't know exactly which is going to win out. My guess is that rates are going to stay fairly consistent. They may drop a little bit in the long term, but I think they're going to stay fairly consistent for the next foreseeable future. I don't think the Fed's going to do much of anything as far as reducing rates. Some people are going back to the negative rate conversation. I don't know that that's really helpful for anybody, but we'll have to see what happens on that. So as far as programs are concerned, there's not a whole lot that I've heard that's changed program-wise. We haven't made any changes. We did close down MSHDA for a couple of weeks. We've opened that back up, so that's good news. There are some lenders that are still not doing MSHDA. I don't know exactly what the issue is on their end. Wells and Chase have stopped doing second mortgages for the moment. So every lender is making changes in their product, in what they're offering, the product offerings, and within those product offerings, what the minimum credit scores are, the maximum debt-to-income ratios, reserve requirements. It just depends. I know the jumbos are harder to get to. So people that are buying larger houses and mortgages that are typically over $510,000 are considered jumbos. And in Michigan, those are not agency loans, so those are portfolio loans. So anybody who offers a jumbo loan, that's coming off of their own out of their own money. They can't resell that loan to the agencies. So I know that there are more and more restrictions on the jumbo loans. There are some ways around that issue. Back in the day, we did a lot of purchase money seconds, where you would keep the first mortgage to the conforming limit or lower, and then make up the difference with a second mortgage. So we've been doing that also. That's been pretty successful. So again, it's great news that the realtors are back. There are restrictions. You can't have 45 people in a house for an open house, but the fact that they can go out to the homes and, take pictures, interact with the sellers, interact with a couple of buyers, makes virtual walkthroughs a lot easier, makes virtual open houses a lot easier since they're now allowed in the house. I think you're going to see more and more of that. And I think that this has changed the way that we're going to do things overall, both the mortgage side and the real estate side. So again, Mark from Caliber, love to help you with your next mortgage. Love to help your clients with their next mortgage. We are doing a ton of business. We are still pushing purchases in front of refis. I'm getting underwriting times in less than 2 days right now. So we're knocking it out of the park, and we're waiting to help more people. So let me know what I can help you and your clients. Mark from Caliber, 248-705-8431. And remember that being comfortable in your home begins with being comfortable in your loan. Have a great day.